So let us begin, and we are beginning with accounting. As I said, we are not going to do all the chapters like whatever it is, but we are going to do a bit of revision. Alright, just move all these books away because we are going to focus on accounting. Basics first, whatever theory part it is, I'll complete that. Now let's start. What is a double entry bookkeeping system? A system of recording financial transaction that recognize there are two sides to every transaction. What does this mean? That, for example, let me take an example. That I have received a payment, that is a rent payment I have received. Then how will I treat that entry in my accounts? See, first thing, if you are the person giving me money, what will it be? That as you are going to give me the money, so my bank account will go on debit, and as I'm getting the rent, so rent account will go on credit. It is like that. Whenever the money comes, then it is debit. When it is given, it is credit. So remember this. Now, what are ledger accounts? What is a ledger? A ledger is a book or a file that is containing an account. That is a ledger. And what are ledger accounts? A history of all financial transactions of a similar nature are ledger accounts. Alright. So, and the format for a ledger account is date, detail, amount, and date, detail, amount. There are two sections that are those that we can say debit and credit. Debit is always on the left and credit is on the right. We must remember this. Now there is some important thing. Now what is capital? The money that we have invested in the business is the capital. What is sales return? For example, you are a customer and I am selling a watch. You did not like the watch, you purchased it, and now you're returning me this watch, then that is sales return. And now what is purchase return? I'll just give you an example, just don't take it into consideration. If these boxes have taken for almost 1,000 to sell, and I know more like they are not the size which I wanted, so I will give it to the person that is a wholesaler or the manufacturer. I'll return it to them, then that is purchase return. Alright, these two terms are very important because they'll be repeated entirely in accountings again and again. There is one more word, that is drawings, which will come. Drawings. Now what is drawings? For example, if I am a owner of a company, for my personal use, I am taking $1,000 from the company's account, then that is counted as drawings. Alright, I'll see what they have written. Money the business owner takes out of the business for personal use. Alright, and here we have completed first part. Second part, credit transactions. A financial transaction. I'll take an example of you, the viewer, and me. You, or let's be me, I have purchased 10,000 lamps from you, but I haven't given you any money. I've taken it on credit base, that I'll pay it to you later. Now when this comes, there are two more things that comes. That is trade payables and trade receivables. What are trade payables? Trade payables are those which we have to pay to some. Those are trade payables. And trade receivables are those which we'll be getting. For example, I'll tell you that the viewer is a credit based person or entity who is buying things from me, but as you have to give me money, then you are trade payables from your end to me, but for me you are trade receivables. I know this is a bit confusing, so let me give you a very good example of trade payables and trade receivables. For example, if I'm going to get rent, then that is trade receivables. If I have to pay rent, that is trade payables. That is what you can understand. Now, there are discounts now. As credit transaction came into place, we have two discounts that are there. That is trade discount and cash discount. A trade discount is a typically where the buyer and seller are in the same line of business. Percentage or normal price reduction is done, and this we can offer it to you. For example, Lai's business sold to Chin for $500 may have seen sold as normally for $625. Chin has been given a trade discount of $125, although the normal price of the good was $625. The transaction was for only $500 and only $500 is entered in the ledger account. A cash discount. See, two discounts are there. Trade discount, cash discount. Trade discount is recorded, cash discount is never recorded. Why cash discount is given? For example, I've given you the, you are the viewer, and you have to give me money, but I'm in need of money. So what I'll say that if you give me money within 15 days, then I'll give you $100 of discount. That is an example of a cash discount. Let's see what they have mentioned. An allowance given by a seller to a customer to encourage the customer to pay an invoice before its due date for payment. That is the cash discount. When we have discount, see, each and every one word has a connected dot. So to this we have two words more. That is the discount allowed, discount received. The discount which we allow is discount allowed, and the discount which we receive is discount received. Alright, fast we are trying to complete chapters. Alright, discuss what is a book of primary entry. A book used to list all the transactions of similar nature before they are posted to the ledger accounts. Ledger accounts we learned beforehand, right? That is book of primary entry. Now when this chapter is coming into play, that is book of primary entry, what we need to know is what is an invoice. A document that a business is issuing to its customer, asking the customer to pay for the good or service supplied or credited. Sales journal, the book of primary entry used to record all the sales made on credit. There are 6 types of book of primary entry: sales journal, sales returns journal, then purchase journal, cash book, purchase returns, and general journal. Very sorry. What is a credit note? A document given to a customer when goods sold on credit are returned to the seller. The amount is deducted from the amount owed by the customer. Alright. What is a cash book? The book of primary entry used to record all bank, cash and cash discounts in all part of the ledger placements. Now what is a contra entry? The completing of both sides of the double entry within one account or a cash book is a contra entry. Narrative, something recorded as journal entry to explain why the entry was made. That is the journal entry. right? No, that is narrative. Very sorry. Balancing accounts is very important. The process of finding which side of ledger account is the greater, or by how much amount it is greater, that is balancing an account. Very important. We have debit balance and credit balance. The amount by which the debit side of account is greater than the credit side, that is debit balance. Credit balance is those which is more than the debit balance. Overdraft. When does an overdraft happen? If I am taking for example, my bank balance is 50,000 pounds, or let's say $50,000, and I have given someone, or I have taken out $60,000, then it is known as an overdraft. A bank account that has a negative balance, payments out of the account are greater the receipts into the account. That is what I explained in a easier term format. Fast, we are moving ahead. Now, classification of accounts. Accounts are classified under assets, liabilities, income, expenses, capitals, and drawings. Now, under assets, we have non-current assets and current assets. In liabilities, we have non-current liabilities, current liabilities. We have income, expenses, capital, and drawings. Do you all know that formula? That is the accounting formula, that is asset is equals to capital plus liabilities. Remember that for entire life if you are pursuing a career in this field of accounting. Let's come to nominal account. An account that is used to record the revenue and expenses of a business also relates to an account that records revenue of the business from the sales perspective. We're moving so fast. The trial balance. A list of balances on each account extracted from the ledger a particular date. Its purpose is to check the arithmetical accuracy of the double entry in the ledger. Now, who is a sole trader? A business that is owned by a single individual. That is a sole trader format. This we'll be doing in business. I think so. I have made a video on that. Kindly go through that immediately if you're not understanding those terminologies that Cambridge is thinking that you might have opted for business and economics if you've opted for accounting. So everything is connected. Everything must be learned and by heartened before you go and give your exams. I'll be posting one of the paper which I'll be making for you guys. Stay tuned and I'll putting that on our website. Alright, we don't have this. We are coming to unit 2, that is financial accounting. Now we come to statement of profit or loss. What is profit? With the income that exceeds the expenses of the business is profit. And what is loss? The amount by which expenses exceed the income. Unlimited liability, very important terminology. The owner of a business is personally responsible for all the debts and losses of that business. Unlimited liability. Statement of profit or loss, that is known as a P&L account, that is profit and loss account as well, you can tell that. Now, there are many things in that. See, two new words, that is carriage inwards, carriage outwards. Carriage inwards, for example, I'm getting these 100 books, getting at my home, I want to sell it. For getting the transported, the money which will be spent, that will be carriage inwards. Carriage outwards, the additional cost that is charged by sellers or the deliverer for the goods that are sold. Let's do an exercise. Is rent and rates an expense? Yes. Alright. These type of questions are there, but if I'll stop, then I cannot finish the entire chunk in a set. Alright. Statement of profit, financial position for sole traders. Now, if you see this word, you'll be thinking, what is this? this is a balance sheet. In normal language, if you are in ISC or any other boards, then you can tell this is a balance sheet. But to be unique, Cambridge uses statement of financial position for sole traders. Statement of financial position, a list of assets, liabilities and capital, and it is reserved at a particular point of time. Now, what is an accounting equation that we learned? That is accounting equation, which is very important, and I said you to remember entire life if you're pursuing a career in accounting. That is assets is equals to capital plus liabilities. Now, very important topic. I would be attaching a separate video in this. Alright, watch that video entirely. That is accounting concepts. Why are accounting concepts necessary? Because they are to ensure that accounting records provide information that is reliable. Anyone using them for making decisions know the comparison between the different business or between different accounting year. What is duality? One of the first concept is duality. That is this recognize that there are two aspects, that is credit, debit and credit entries. That is duality concept. We have business identity. What is business identity? This is a broader topic, but I'll explain it in a shorter term and a simpler language. Business identity is only that much that a business has a separate identity apart from its owner. Money measurement. Now, this is very important terminology. Only transactions that can be expressed in monetary terms are recorded in ledger accounts. For example, goods, non-current trade, receivables and expenses, those are money measurements. But if you talk about that employee skills or the reputation of the company, that does not come under money measurement. The historic cost. I'm not changing this slide. Historic cost. When we did not establish our business, but then too we had done some expense, right? So that we can put in historic cost. What it is, let's see what they are saying. Financial transactions are recorded as the original cost to the business. There are two disadvantages. That it does not allow things that cannot be expressed in monetary terms to be recorded in accounting, and inflation means that prices rise and value of money falls. This is what it is. Realization. Revenue is recognized or accounted for by the seller when it is earned, whether cash has been received from the transaction or not. What does this in real mean? I have given you order, but you have still not sent me an order until and unless it is there in written format that I have given you order. It is not legalized or a secured transaction. What is consistency? Financial transaction of a similar nature that should be recorded in the same way. You cannot change the how account like in depreciation format or whichever format you do. You have to do it in a same way. If you want to change, you have to take the permission from the stakeholders. Without that, you cannot. Materiality. In materiality, let's take a very good example. If I'm a self-employed builder, then I'll spend $200 on some tools intending to keep them for a number of years. Then that would be my non-current assets. But if I'm a company, like big company, large building company, then I might spend $200 on the same tool for use on a particular project. And I will not write it as an expense because it will seem as it might seem as a loss for my stakeholders, but it isn't a loss. We have matchings. The matching concept is often referred to as the accruals. Next chapter is entirely based on accruals and the matching concept. That, for example, this year rent and rates, April 2023, my rent and rates have come. But by the end of April, now in May I have to settle it. I'm settling that amount. So I will match it in that April month only. Understood? Whatever is of what, that will go in that. Alright? Prudence. Profit are not added. Profit are not over added because it can distract the trader. But loss can be added or subtracted. But profit cannot be over added. Going concern. When there is no intention to discontinue a business in the foreseeable future is going concern. Substance over form. The economic substance of the transaction must be recorded in the financial statements rather in its legal format. Objectivity. It is a principle which states that financial statements should not be influenced by personal opinions and bias. That is what objectivity is. I hope you might have liked the video. Thank you.